And welcome. We are live, and welcome to Behind the Markets. We have gotten started. We'll be joined by Vernon very soon, and he will be joining us now. But today is the Africa Freedom Day edition. Welcome to Africa Freedom Day. Happy Africa Freedom Day for everybody. This is a day that we commemorate the freedom fighters' struggle and everybody who pushed in. For those of you who are joining us today, welcome. I know some of you are with the Great Radical Walk. There's so much happening today. There is the Barca legends versus the Zambia legends with the arrival of Ronaldinho in Zambia. I think everybody has been pretty much had their eyes on that. Simultaneously, we also have the finale of the long walk for entrepreneurship. We've actually been seeing that panning out with our radical entrepreneur whose setting is actually moving, I think, from Novare all the way to East Park. And there's a lot happening in today. But today, I think the kickoff that we're going to be doing is we're going to be doing Enterprise Thursday as usual, with a few messages and a few news clips, and also something I picked up from, I think, a video that the radical entrepreneur did do on his walk, which I want to quickly talk about at the end as our topic of discussion, specifically the fact that it's Africa Freedom Day. Though the theme for this year has been accelerating the Africa continental free trade area, the implementation. That is one of the things that they're trying to push because they understood that economic freedom is of extreme importance. And today I'll also be giving you the inflation report. So for those of you who need to understand the inflation environment for your investment decisions and business decisions, take a look at them. It is actually going to be quite important. But for now, let's kick in to get started as where we are behind the markets. Enterprise Thursday being the 25th of May, 2023, the Africa Freedom Day edition. Today, we have seen that markets did continue their slide into the negative. We have seen in terms of the Kwacha itself, the Kwacha has continued to lose value. This is over 30 days of consecutive Kwacha losses on the market. Keep an eye out for that. We have seen that the stock market yesterday also did continue its flat position. Because obviously there hasn't been much in terms of trading activity. We are still trying to keep an eye out for what else is happening on the market, but we did see a flat stock market with no price movements as of yesterday. Still trading near all-time highs. So it's not like it's in a losing position. It's near all-time highs mainly because of the main stocks that have moved well this year. Be it Puma Energy has become a billion Kwacha stock, while CEC has gone way ahead now. It's become the first 8 billion Kwacha stock. So we actually are still seeing strong levels of the stock market at the top with the main companies, with some outlooks that looking like they might improve second half of the year going into the following year. We have also seen the bond index continue to rise upwards, waiting for the bond auction where people did submit yesterday. Remember that today is a holiday, so there are no submissions being taken in by the BOZ. Up 0.006%, but down 0.18% in dollars. Interest rates are staying now around 24%. Remember, they dropped below 24% for a little bit, now have come back up. So there's a little bit of sell and buy happening in the market in general. Simultaneously, we have also seen that the rand has actually peaked up above the 1 Kwacha point again. So after months and months and months of having a strong Kwacha, then we lost it again. Then after months again of having it again, after a month of having it again, we have lost it. So the rand is up 3.69% year to date. In the last month, up 4.16%, but down 6.04% year to date. So there is inflation pressure from South African imports, especially those coming from the cross-border traders. That you need to keep an eye on. So those are people who are hopping on buses, going to go buy things from South Africa, bringing them back, and are going to bring them back in slightly more expensive than they did last month because of a 3.69% increase in the value of the rand versus the Kwacha, which then added to South African inflation will add more pressure to the prices that are actually coming in to our country. Other data that we've seen also, as we said, is the bond market is up 0.6%, 0.06% yesterday, but up 10.98% year to date, 4.5% up year to date in dollars, but down for the week, the month, and also the day yesterday, with interest rates up 0.36% year to date, but still down on the month, 0.35%. They did peak out and then started sliding down. You can see on the chart there that interest rates on bonds are pulling downwards, meaning that there has been net buying happening at a decent price. So that's actually still some good news happening here. In terms of the commodities market, we did see copper drop below 2,000. Copper dropped below 8,000 for the first time yesterday due to some tough news on the market as we're waiting for the debt ceiling. I think this is the main concern for a lot of people who are looking at the prices here. But copper prices slide as global demand sharply drops. This was news that came in from the Financial Times. And China fears send copper prices below 8,000 for the first time. So it's not just a debt ceiling, it's a combination of demand coming in from China. So we're getting a lot of mixed signals from copper. There's low supply, but there's also low demand. China is coming out of this pandemic as a slightly service-driven economy. Also, yesterday, remember that we showed a lot of the manufacturing index, the manufacturing PMIs were all in contraction. So copper fears dropped below 8,000 for the first time since November as prospects of a quick China rebound recede. Copper for delivery July was down 2.74% on the COMEX market in New York, touching $3.5 per ton. So you can see that there is a push down in prices. The metal has tumbled 7% this month in the face of disappointing economic data from China. All gains following the end of the COVID lockdowns at the beginning of the year. Poor domestic demand has forced smelters in China to ramp up export that has helped them replenish inventories elsewhere. So they're not really pushing yet. So I think that's been the main concern here, that copper prices are starting to tumble due to weak Chinese data. So just always keep that in mind. It's weak Chinese data that's actually pushing copper prices down. Oil is up also due to a lot of drawdowns that are happening. 12 million barrels down in U.S. inventories. Why? Because of the U.S. The strategic petroleum reserves of the U.S. government that are coming in. So this is a lot of bad pressure that'll hit up on our currency. The Zambian currency is a function of oil and copper. Remember that strong oil and strong copper will push the Zambian currency. So this is upward pressure on the dollar that's also starting to push in, and future inflation pressure that's also starting to sneak in. Gold is down about 0.48%. Sorry, gold is down about 0.88%. Mainly also due to debt ceiling talks in the US. We did see that cryptocurrency down 2.3, Ether down 2.1, and then gold down 0.23. Even in the face of the dollar getting stronger, these three all lost a bit of ground yesterday, pushing their prices down day to day. So you can see there is a little bit of confusion still following the markets right now. I will be talking about even how to look at gold tomorrow. You want to try and kick in for that one. That'll try and help you out there. But you are seeing that your cryptocurrencies, though they're strong performers year to date, they're still having some weaknesses in them in the month. Though on the month, Bitcoin is up 5%. This is mainly due to the dollar itself. Because if you go back to the actual look of the dollar, you'll see that the dollar is up 9.5%. So Bitcoin being up 5.7% is really just a function of the dollar itself. That means raw Bitcoin itself is down. Ethereum, anything there that's down below 9% has actually been struggling on the date. So year to date, gold is up 13.99%, Ethereum up 59.45%, and Bitcoin up 68%. I say it again, people, these are highly volatile assets. You keep them on the fringes of your portfolio. Okay, so if you take a look again, here's the real returns now. Factoring in this month's inflation, we'll be going through inflation data. For this month, you are seeing bonds up 11%, stocks up 11.1%, gold up 14%, and you can see them in real return format, 4.95 and 7.9. US dollar is just basically broken even year to date in terms of inflation, and we're also taking a look at Bitcoin, which is up 62.6% in real terms, 53.4% in real terms. Ethereum, as I said, people, when it comes to USD, gold, Bitcoin, and Ether, these are what we call risk. These are what we call insurance policies against broad market downturns. You don't hold them as the majority of your assets. If you do, you are likely going to face a huge market loss when they turn around, because these are wildly volatile things. The kwacha can lose, the dollar can lose value harshly. You saw it last month. If you were holding dollars last month, you got wiped out, because you see, that's how quickly these things can happen. You don't see that happening in the stock market that quickly. You don't see it happening in the bond market that quickly. These are more broad markets that take a long time to turn downward and trend upwards. So they move in a much slower and gradual fashion. So that's the data that we'll be looking at from there. Deep dive Vernon, it is time to touch into our deep dive on Africa Freedom Day. And the deep dive I want to quickly touch into today is inflation. Yesterday, we got our inflation read for May 2023. We're going through trade tomorrow, but we got our inflation read. And what we saw was inflation drop back down to 9.9% from 10.2%, with monthly inflation cooling. Now, the main driver was obviously transport prices actually declined, slight declines in grain prices, which managed to overpower vegetable inflation rising. While food inflation is slated downwards, vegetable and fish prices are still high with global inflation. Global prices are still elevated but declining, especially in the food department. So let's take a look at some of the charts that we have here for inflation. So you can see that food inflation did come down a slight bit by 0.3, but the main one was non-food inflation that came back down from 8.27% to 7.56. That pushed general inflation down from 10.17% to 9.89. So you can see that was the main driver of inflation coming downwards. Now, if you look at the chart here, this is your monthly inflation, which is actually the lowest since October 2022. So you can see the black bars are monthly inflation. Your red bars are your monthly benchmark. Okay, so just keep that in mind. That is your monthly benchmark, the red ones. And the monthly benchmark is based on 10 years of average inflation monthly for that month. So the 10-year average for monthly inflation for May is 0.85%. We dropped down to 0.59%, mainly due to the drop in transport inflation. So if you look at food inflation, you can see that food inflation was up 0.88% versus the expectation of 0.76. This is mainly due to what's happening in the vegetable market. But food is still in lockstep with last month. It hasn't risen high from last month, but it's still lower than it was at the beginning of the year when it was up 2.76% when we had those huge spikes in milli meal prices. So you can see that we're down to 0.88%, somewhere closer to the expectations, but still problematic. It's still a bit higher than expected, and we should be going into the inflation valley very soon, where more food is coming on the market, and we should expect prices to start coming down. But if you can see here, this is our kitchen table index of the prices on your kitchen table, what you should be expecting in terms of price movements. 3.45% decline in grain prices in general. We did see versus a 3.46. So there was an erasing of last month's price movements upwards in grain prices. We are seeing meat prices have pretty much stayed flat. Chicken prices were up 3.67%, with fish prices up 8.35%. And the big one was vegetable prices, up 14% just last month, mainly driven by tomato prices. Those are the ones which are moving way up. Fruits and condiments are still down in the single digit inflation, 0.89%, 0.91. So it's really fish and vegetables which are becoming more expensive. As you're doing your groceries, expect this. This is what the prices you have seen in the previous month. Also, what we've seen in terms of annual inflation for each of the food groups. Take a look again. Grain prices up 24.16% on the year. They're still high because of the beginning of the year spikes. This is annual inflation. This back here was monthly inflation. This is annual inflation. How much of the price has grown since last year, May 2022? We've actually seen 24% jump in grain prices. Grain being your milli meal, your maize, your roller meal, those ones together, rice, all those things. They're up 24.16%. Meat prices up 6.08%. Chicken prices only up 2.2%, but fish up 14%. Vegetables up 23%. So you can see vegetables and fish are the key drivers of maintaining food inflation up. Fruits and condiments are still down, but fruits up 0.97%. In terms of your breakfast meal price inflation, take a look at where we are. Breakfast meal price inflation is up 23.92%. This is our staple. So you can see that it drives a lot of inflation. But you can see it's down from where it was last month, where it was at 25.28, down at 23.92. Yes, people, I do go down to the levels where I track Ubunga inflation. This is what you need. Okay, so you need to know what's on your table and what's causing you stress. Other prices that we're looking up here as well is that you've got your your what's it your grain price inflation. This is your mixture of roller, rice, everything together. It's dropped down from 29, 28. It's down to 24 now, minus that little price drop that happened in January. You can see that it is down to 25. It is down to where it was around October. So we are seeing downward pressure starting to come into the minimum prices. Obviously, there's a lot of nabbing of a lot of these people who are trying to push goods out of the country illegally. The exporting that's trying to happen illegally, or the smuggling that's trying to happen illegally. This is your vegetable prices. I know people are trying to figure out what is happening with vegetable prices. If you're looking on the month, just year to date, take a look at things like onions. Onions are from 14.69 kwacha per kg all the way up to 19.73. Tomatoes are up from 9.5 all the way up to 14, almost a 50% hike up, while rape is up from 7.42 to rape vegetables are up from 7.42 kwacha all the way up to 8.88%. So these are your selected vegetables year to date that are actually pushing some of the prices. So vegetable prices have been part of the push here. But if you look at them from an annual perspective, tomatoes are up 12.1%. So there's a seasonal factor. Rape prices are up 20%, and onions are up 12.1%. Tomatoes are the key issue here. They're up 37.22%, keeping food price inflation up. So your vegetable prices this month have been relatively high. This is what's been affecting a lot of people in their households in terms of household food inflation. So millennial prices are elevated, but vegetable prices are rising pretty fast. So this is also a seasonal factor that's actually affecting them. If you're looking at non-food inflation, it dropped all the way down to 0.2%, the lowest that it has been since October, where it was deflationary at negative 0.16%. It has been rising due to transport prices from November onwards, but it does appear that transport prices have flattened out, with diesel prices coming down. The downward push of diesel prices has been pushing transport prices down. Remember, transporters mainly use diesel. Okay, mainstream transporters being your trucks, your canters, the things that move things around, people who move maize around, they mainly use diesel. So when you bring the diesel prices down, it brings transportation costs down. So I know to the retailer, they're saying, but hey, but my pump price hasn't gone down. Sure, they're looking at the transporters. Okay, the transporter service fees are coming down because of diesel prices. So the push in diesel prices actually affects the push in transport prices a lot more than the push in regular prices. So you can't look at your petrol prices. Yes, we can look at transport costs that people can use due to taxi apps and those things. Those things keep prices also controlled. But it is really the diesel prices that have been the main push. The 2-month push downwards of diesel prices have led to a 0.2% month-on-month inflation, mainly due to this. So this is mainly due to diesel prices coming down. So looking at this, you're actually seeing that the key driver here, as I've shown you, is transport inflation has actually been wiped down by 12.4%, mainly due to diesel prices. This is just on the month. Year on year, you can see that transport inflation has actually been wiped out. We're back to where we were in terms of transport prices at the beginning of last year, or at May last year. But other inflation prices are still up. Housing and utilities prices, they're still up. So if you look at even on the monthly level, housing and utility prices were up 1.5%. You can also see that most of the things were also pushing up above that 0.2, but really it was the transport prices that wiped out all the gains in these other areas. So the main one you can see here is transport inflation has been the key thing here. What has been the key contributor to keeping inflation subdued is a push downwards in transport prices, even though housing and utilities tried to push prices up. And even on annual inflation, the push back downwards, what dropped annual inflation by 0.28% really has been transport prices thanks to diesel. So do you see the effects of diesel on the economy? This is why it's extremely important to actually keep diesel prices subdued during this period. Other data that we have kept in mind is also global inflation. These were last month prices, just also to remind you that most of the things are coming down except sugar and beverages, not alcoholic beverages. People were talking about tea, coffee, the things that you're supposed to be taking, not the things that you want to be taking, or you are probably stumbling from right now as we speak. Because we know that it's a holiday, we know we're Zambians. So it's actually sugar prices, which are up 17.6% as of last month, mainly due to shortages in the sugar market globally. And you see, sugar is the only thing that's up 22% annual inflation in terms of the global market. So I've given you my recommendations when I'm looking at this. We're looking at inflation still being stuck somewhere around 9 to 10% at the moment, with upside risks, and the upside risks to the FX rate because of prolonged and protracted debt talks. In the second part of the year, we're also expecting oil prices to come up due to Chinese demand, which is expected to recover. But that may also be having issues because that may push up the copper prices. But in the short term, you're seeing a better push for short-term growth inflation flexible bonds, which is 2 year, 3 year, and 5 year. Those are your better bonds that actually do this. So you're looking for investment avenues that can invest more in those assets, and unit trusts that buy and hold 2, 3, and 5 year, not the ones that trade them. Trading might be a little bit of a problem because you can see those fluctuations happening. The equity investor obviously should look out for cash flows for businesses that have got strong cash flows, low levels of leverage because they don't want to be caught on the wrong side of rising interest rates, and also market pricing power. That, Vernon, is our countdown of inflation and what that means. Headline being inflation drops from 10.2 to 9.9%, mainly due to strong transport costs. Diesel prices coming down. However, there are some rumbles happening from vegetable prices, even though Ubunga has come down by 3% as of yesterday. That is your brother giving you the inflation lowdown, with a few more stories up the hand here. Other deep dives yesterday, as President Hichilema did give his Africa Freedom Day address, where he did stress that political freedom must be accompanied by economic freedom as part of the main theme. They're looking at acceleration of the Africa Continental Free Trade Area. Some of the policies he's highlighted was border infrastructure that they actually have been investing in, the public-private dialogue, positioning the country to be a net exporter of energy, agriculture, and manufactured goods, and leveraging ICT for trade opportunities. He did call upon the youth in the country to participate actively in the economy, and also for the private sector to explore trade opportunities independently so that the government can come behind and give them the support that they're looking for. So that's the structure that they are looking around in terms of all of this. And one final news story, Vernon, which actually caught my attention, was Citizens Economic Empowerment Fund has been flooded. Okay, the Minister of Small Businesses yesterday actually issued out a letter saying they have been flooded with applications, mainly because about 16 billion kwacha worth of funding applications, which is over 50 times, almost 50 times what their funding is. So they only have 343 million kwacha in funding for lending for small businesses or empowerment. Meanwhile, and that's even a 15% increase from the last budget. Meanwhile, they're facing 16 billion kwacha worth of requests. Now, I'm going to ask a quick question before we get into our main topic of discussion in our break. What is the nature of these requests? So yesterday he did say that the commission has referred people to banks, even though interest rates are high, but they're looking for a lasting solution. My concern, Vernon, has always been, are people utilizing this for actual businesses? And what say ye? For actual businesses, or is it the people who are just trying to raise money, then when they get the money, time to buy a car? This is my worry. That's it. People start businesses when they hear money is available. They don't start businesses, then go and look for fun. People start businesses. They hear, there's money being given out. Okay, let me concoct a business quickly here so I can get my hands on money. Let me hear what you say.
Yeah, I think it's the not preparedness. I think that just brings a worry. Uh, the hunger for resources and money is great. It's good, but what to do with the money? I think it's dangerous to even leave, so much money to people when we have no idea to, utilize it and make the best of it. And the dangerous part for me is how we are excited to have money and cry for money and look for money opportunities when we have nothing to do with the money. I think it's best if we can we can be out so hungry looking for education opportunities, and then later on now we can probably look at how we can now accompany that with some sort of funding. But away from that, I think we should really be on the trajectory of wanting to build more of capacity and learning how to use money. But I mean, Zambians, we feel when you have money, that's when you prosper. When actually it's the other way around. With money, we're actually but worsening our own situation. At the end of the day. But my prayer is, owing to Africa Freedom Day, that we can pick up and build Africa in a better, situation and not find ourselves in more floods. The IMF bailouts, the IMF, defaulting as Africa is an indication about how we handle money as Africa. So I think we need to really struggle with whatever is available now to build our capacity and how we can handle money better moving forward. And we can now start crying for money. We can now be open to receiving money and making money because we know how to handle money, essentially.
So go, and this is my issue. You can solve a problem, Vernon, without the money. You can. You can actually solve a problem first without the money. Building a business around converting that solution into a product, okay, going from problem to product, that needs a little bit of stimulus, but you should have tested it out a little bit first. Then going from product to business, that's a different one. Okay, so what you need to understand is that people try to become too big at the beginning. So I'm gonna reference what's his name, Radical Entrepreneur. Yeah, actually, I really urge people read these guys' books. They're actually telling you the stories of how they've built themselves between. And it's a lovely thing to hear somebody explaining things because you people always complain saying where are these things from a Zambian context. There's a guy who's written his life story, his business story, and you're not reading it. So it means you're just hot air, okay? But he's actually written this, and it's wonderful to explain. He talks about his first business, and he says knowledge capital and social capital are more important than financial capital when getting started. When growing, yes, you can start seeking financial capital, but knowledge capital, knowing how and why you are solving a problem, in addition to how to the people you need to work with and collaborate with to solve this problem, that's where you kind of get this going. So I want to really stress one thing here, Vernon. For me, the key driver for a lot of these people is solve the problem first, then seek the capital. You know what I've also seen, Vernon, is that people who don't start their businesses first before they look for capital tend to overshoot how much capital they need. They tend to overstate it because once you've gotten started, there's a lot of things you'll realize you didn't need money for. So you start to do those things, then you really own, and because you're trying to manage an active cash flow of your business, then you're going to become very frugal about, okay, maybe I don't need that much. Maybe I didn't need 50,000. I actually needed 10. And I can do with maybe 15 just as a buffer, but I don't need the 50 I thought I needed because 50 now I've got connection. So Dumisani tells the story about how he started his very first business. And his very first business was when he moved from his village school to Matero Boys. Okay. And when he was at Matera Boys, he would see it started from the fact that he came from obviously he came from humble backgrounds. Okay. And he said he didn't realize how humble his backgrounds were until he went to Matera Boys, where he saw people with drivers, people with lunch boxes that had meals that were better than he would get at Christmas. That's how he describes it. So he goes and says, okay, you know what? Then if this is the case, I gotta up my game. He said it saddened him that it was so bad, that the difference was so big, but he pushed himself to up his game. So one of the guys comes up to him and says, yo, Dumi, you've got some nice geography notes. Can I take some of those down? So Dumisani is like, hey, that's a business opportunity. So he copies some notes. He says, I'll copy my notes for you if you can share your lunch with me. Another person comes and another person comes, and you realize, hold on, there's a big market here. There's a bunch of students here who need my geography notes. So he told the guys, look, instead of you photocopying there at the school, you're going to pay to copy my notes. How about you pay me the money and I make copies for you? So, and he said, pay me the exact same price. He rushes off into Soweto market. I don't know if it's Soweto, but he rushes off into one of the markets and he says he met a guy there who could print for much less, and his business was about splitting the difference. So three things he knew. He knew a problem, okay? And he learned how to solve it. So two things, sorry. He knew a problem amongst the students of Matero Boys, and he learned how to solve it. Then he knew a person who already had the printer. Now, here's the difference. A person rushing for citizens' economic empowerment in that situation without getting started would have then pledged money, would have requested money to buy a printer. Okay. Meanwhile, what he did was he used his social capital to access a person with a printer to service a market without any debt. Do you see why getting started first is extremely important? Okay, you actually have to utilize your social capital and your knowledge capital first before, because I can probably bet that about out of those 16 billion kwacha worth, there's not that many who have actually gotten started properly first. And it's not growth capital, it's survival capital, and they're not solving problems. They're probably now trying to get a CEC loan to pay the rent at their premises instead of to actually bring a new product onto the market that will create jobs. And this is why these funds end up being ineffective. Okay. Now, CEC is just trying to now recover from actually poor collection rates. So they've gotten it back up to about 57 to 60%. Now they're trying to get it up to 80%. Then they need to start looking at the efficacy of these funds. Are these funds yielding jobs and growth and creation? So that is the main thing and the main concern I'm going to keep harping at here. But to go into the other side of the break, Vernon, I want to talk about, because I want to talk about the models of African freedom and development, especially what the president said in his speech: economic freedom versus political freedom. I really want to stress the point about how we need to change the way we think so that we can actually actualize freedom. And I gave you an example right there of a young boy who decided to find somebody who can print for him, negotiate very well, and make a business out of the difference, because he could get there. He knew the guy, he created the notes. So his knowledge capital was creating the notes. He collaborated with somebody, and no capital was needed. And he actually says at the chapter, he says, I wonder, when people say they need access to capital all the time, have they really stressed their mental capacities before they go into this pursuit of capital? But here's something that he said about poverty in Africa, and especially in Zambia, which actually makes sense. He talks about, we are the poverty carriers. Take a listen to this. It's a speech he made as he was on his walk. He's now finalized. He's now on the final stretch. He should be closing up at 10 o'clock, but he's currently on his final walk. But this is at the beginning of the walk. This is a comment that he made.
It's retrogressive. It is not progressive. So if one gets to progress, if one gets to make it financially, we tend to call them names and demonize them. We call them Satanists, we call them witches, we call them, and we accuse them of having used juju. We do all these things. All of a sudden, whoever dies in the family has died because of that one who has financial freedom. Why? Because to us, in our mindset, what is normal is poverty. So this is the mindset that we would wish to change in this generation, because our continent and our nation cannot develop with this kind of mindset. I should be quick to mention this. Imagine this. If for a moment everyone was removed from Zambia, every Zambian removed out of Zambia, Zambia remains a very rich country. The problem comes in when we put Zambians back in Zambia. The moment Zambians land back in Zambia, Zambia instantly becomes a third world country. Why? We, the people, are the poverty carriers. Why? Because of our mindset. There are certain countries that are doing so well without natural resources, but just using the human resource, the positive mindset, the innovativeness.
So I'm going to leave that there. And he's right, people. No matter how offended you can feel about that, we are the source of this poverty. Because how come everybody else can get rich in this country except us? Why are we the ones who are stuck in poverty in this country? Because we are the poverty agents. That's where the problem is coming from. We've cultivated this belief that this is the system that operates. Now, on the other side, I don't know if we give me a signal, a thumbs up or a thumbs down, Vernon, whether we have to make a transition. And we will be doing that just now. So we'll catch you all on the other side of this, where we'll talk about African freedom development models, Booker T. Washington's self-help versus Du Bois' talented 10th. You really want to stick around for that.
Roddy.
So before we get started, Vernon, those were harsh words that were said that we are indeed the carriers of poverty. Uh, and it was quite an instant example that when you remove Zambians out of Zambia, it becomes a wealthy country. But the moment you put us back in, it instantly becomes. That's a harsh example. Jesus, that's a harsh. What do you think?
Uh, we need to face reality. Really beating around the bush has not done us any good so far. And being prudent, being blunt with whatever we are tabling, and especially if we're being challenged by some of these matters. If somebody, Mutwale, if somebody has spotted something, notably about you that you probably have to improve on, I think I mean, maybe context, maybe the way it's put out, but if it's the truth, I'll be more than happy to take it. But we want to be pampered with nice words when we know we're not helping you progress in any way. I feel such kind of politeness sometimes is not really relevant. Let's put it, if it's black, it's black. If it's blue, it's blue, and let's help people progress. Mutwale, we haven't been doing so well as Africa individually. Let's even trickle down to the individual aspect. Personally, we're not doing okay, and we continue on this trajectory of being broke and misusing of money. I'm not apologetic about those words. No.
And I stand by them too. So, in terms of developing as Africans, in terms of developing as previously disadvantaged people, there are two main fighters of civil rights. Everybody thinks civil rights started with Malcolm X and Martin Luther King. It also started with the Africa Freedom Movement. That was the 1960s. But 100 years before that was actually the birth of the real civil rights movement. This started with Booker Trafalgar Washington and W.E.B. Du Bois. And these were the freed slaves. Now, Booker T. Washington was born an actual slave on a plantation. Not this stuff where young people say, oh, we're born in modern day slavery. You're not a slave. Don't lie. Okay, you're free. You can go to school. You can start a business. You can do all this stuff. This guy grew up in an environment where human beings were being sold. Okay, you were sold like a cow or a goat. That's how he was. He was born in that. And in fact, the name Booker T. Washington also comes from the fact that these were the people that owned him. So Booker Trafalgar Washington was the first one who started. He was born a slave, liberated in 1964 when he was only 9 years old. He writes it in his book, Up from Slavery, where he talks about the day that they were liberated. And then he talks about his movement going to school for the first time, building a school. He became the head of a school and the owner of the school, one of the first Black university leaders in the USA, teaching people industrial skills. And he believed in economic prosperity first. He believed in first build yourself economically before you pursue politics. Okay, because you need an economic base for freedom, because what's going to happen is you're going to be independent on paper, but you're never going to be free, the same way Africans are. Now, W.E.B. Du Bois believed in what's called the talented tenth, one of the most putrid doctrines I think I've ever seen. And I know a lot of people who are especially highly educated love his words because it favors them. But what W.E.B. Du Bois pushed for was for Black people to actually or for white people to select the top 10% of Black people, educate them, and then make them the representatives to help negotiate good policies so that white people can then give Black people some money back and help them back. Let's see, how have those representatives done for us people? Every person who represents us, who has gone into power, have they served us, Vernon? No, they haven't. They've served themselves. Okay, this is why it's a very poor doctrine. Now, why has Africa chosen W.E.B. Du Bois' doctrine? Well, W.E.B. Du Bois' doctrine was not popular in the 1890s to the early 1900s because Black people really rallied around Booker T. Washington, started to build businesses and started to build things. It was the Great Recession, unfortunately, of the 1930s going into the 1940s, which gave the rise to W.E.B. Du Bois and the change of the Democrat Party's tactics. Instead of whipping Black people, put them in plantations of poverty and give them welfare. When they introduced the welfare system, the politicians came onto the rise. This is where Martin Luther King, all these ones really came onto the rise because of that, because of political freedom above economic freedom. Martin Luther King did support economic freedom. It's just that, unfortunately, he pushed first political freedom, which gave rise to what we call poverty pimps, or poverty hustlers, as we like to call them. Now, the two models, unfortunately, W.E.B. Du Bois then came into Africa trained some of our liberation heroes, and unfortunately, the ground level of liberation has been socialism, which has not done any good for people. Now, I'm not an ideologue just by say, but people, you have to understand, socialism does not breed a collective mindset of people. Socialism creates a collective system that makes the individuals in it jealous, greedy, and envious. You feel angry when somebody else is rich. You feel upset when somebody else has more money. And instead of emulating and creating, you start trying to pull them down. No, tax them, take from them. We need. So you start trying to get the government to become your attack dog, and you start thinking about yourself. You're not thinking about the collective system. I venture to say, Vernon, capitalism actually makes people more united. The reason is this: capitalism actually forces you to have to collaborate with people. It forces you to actually have to solve the problems of people, because, Vernon, you can't make money without solving another person's problem. You can't. You can't make money. Also, think about Dumisani. Dumisani could not make money in printing people, in making copies of his geography notes without working with that man in Soweto Market. He could not make that money. So he had to collaborate with another person, sharing the wealth with him. And also he had to now give money towards it. He had to now start solving the problems of his peers. So you see a more union and socially oriented system actually in capitalism if used correctly. It's the socialism part where we have to be very careful. Now, I'm not going after any specific people, though the socialists in this country are rather wealthy from capitalism. That's their problem, not mine. No, I'm always shocked by socialists who are rich from capitalism and then start saying the capitalist system is broken. So how did you get rich? No, how did you get rich then? So after you get rich, you want to close the doors. Interesting. Now, the thing I want to now point out here is the two doctrines at the base of Booker T. Washington's self-help versus Du Bois. And I'm going to quickly analyze them next to each other. And this is a history of where these things come from. And I think we have to be very careful. If you want to know what changed my mindset, I read a book called Up From Slavery by Booker T. Washington and the Future of the American Negro, where he actually points out all these policies. And I've also read W.E.B. Du Bois' Soul of Black Folk, and I've actually studied them. So to understand where this came from, where do these policies of Black development and African development, where do they come from and how do we utilize them? I know some may not be able to see them, but I'm going to go through these things to try and help you. Now, if you look on the right, you'll see that Booker T. Washington, born a slave, 1856 into slavery, became free and rose to become an educator and a prominent businessman. W.E.B. Du Bois, who was born into freedom, became a Harvard-educated sociologist, historian, and civil rights activist. Skills that were not useful to Black people back in those days, but because he was popular, this is what they gravitated towards. Now, at the beginning, Booker T. Washington believed in hard work, economic savvy, character building, skills, and personal development to uplift Black people themselves. He calls it the doctrine of self-help. W.E.B. Du Bois believed that that there had to be a Black political elite who can now institute social welfare and a fair justice system and racial equality to uplift society. Booker T. Washington's pillars of his philosophy were based on economic prosperity, vocational training. In other words, things that people can do that are useful. So in other words, farming, tailoring, brick building, the things that were needed in society, skills, and he believed in training people. He believed in separate but patient development. He said, look, Black people have to develop on their own. Like Africa must develop as a unit first before it can start looking to interact with the rest of the world. Du Bois believed in political rights, social welfare, liberal arts education, and integrating into society, and then white people accommodating Black people. The key pillars of success of Booker T. Washington was effort, vocational training, character building. Du Bois believed it was a mix of Black intellectualism and debate. Booker T. Washington believed in economically uplifting Black people would equalize society. Du Bois believed that an equalized society would uplift Black people. Booker T. Washington believed that Black people must learn to use capitalism to elevate themselves and equalize themselves. Du Bois believed capitalism was the root of all racist evil and it must be destroyed. Booker T. Washington believed in the core focus should be on jobs and economic progress, while Du Bois believed it should be on justice and racial equality. Booker T. Washington believed that Black people were was responsible for the rise of black businesses and led to tradesmen and craftsmen, while Du Bois was responsible for the rise of black politicians and intellectuals and activists. Booker T. Washington believed that resulted in the reduced disparity. So through the leadership of Booker T. Washington, you saw reduced economic disparity. Black people and white people were actually becoming more equal. Black professionals were starting to rise. Du Bois resulted in the civil rights movement, which removed and reduced systemic racism and legal racial barriers. In other words, for people to be blocked. Booker T. Washington established the National Negro Business League. Du Bois established the NAACP. Followers of Booker T. Washington became were people like the Panthers, Marcus Garvey, who believed in economic progress first, while the followers of Du Bois became Jesse Jackson and Al Sharpton, race hustlers and poverty pimps. So the reality is that the politicians, the black politicians, follow Du Bois because it makes them rich. Keep the black people poor as possible so that we can get money from them from aid and all sorts of things. While Booker T. Washington says, train the black people to be able to take care of themselves as a society that will grow. Do you know who has utilized Booker T. Washington's ideology? The Chinese. They're the ones who've actually utilized it. Okay, it's a sad thing that the Chinese are the ones who've actually done this. They said, let's give our people economic abilities and economic freedom before they even start voting. And as a result, who has developed, Vernon? Who? China or Africa? I beg to ask the question. We started the same place. Who has developed? As we close up. China.
Absolutely. China is way more developed today.
Exactly, because they pursued the development principle of self-help. Build yourselves before you ask for help. Build as much as you can before you ask for help. Now, can everybody use this? This is why that book, The Capitalist N-Word, is not pretty much accepted. But I stand to say, Vernon, if we're going to develop this country, as many of us as possible need to take our eyes off politics all the time. We need to take our eyes off of it and start looking for what are the opportunities, what are the problems people are citing in society that we can solve. Solve problems, build products, build businesses off those products. So find a problem that you are proficient in solving. Solve that product and make a product and build a business and a brand on top of that. And I promise you a lot more wealth and equality and development will come of this continent. But if we keep talking about this honorable, this politician, that politician, we are not going anywhere. Okay, that's why a guy is marching from Solwezi all the way to Lusaka to get you people to think differently. Okay, so that you can start to look at problems in society and be the solution, not be the problem in society that needs a solution. And I'll leave it there.
Happy Freedom Day.
Happy Africa Freedom Day, my brother. Cheers.